Hey everyone, welcome back to Corporate Decoder, the place where we decode the hidden stories within corporate filings. And today we're diving into a very special report from Emerson Electric Co., or EMR as they're known on the stock market. This isn't just any report, it is about something crucial happening right now in the company, something that affects your investments and understanding of what is really going on behind the scenes. So what exactly is this filing about, you ask? Well, it details how Emerson Electric Company shared its latest shareholder meeting results. And this is where things get interesting, because it is not just about who won or lost votes, it is about understanding the direction the company is steering and how it might impact all of us. Let's jump straight into the heart of it, the votes themselves. The company held its annual shareholder meeting on the 3rd of February 2026, and they presented 4 key proposals to their investors. The first proposal was about electing directors. Now this is pretty standard stuff, but it is important to see who is at the helm. We saw Martin S. Craighead Gloria, Flack, and Matthew S. Levatic all nominated. The numbers here are pretty telling. Martin S. Craighead received about 369.5 million votes in favour, with 49.7 million against and 2.8 million abstentions. Gloria Flack, on the other hand, garnered a much stronger 410 million votes for and only 11.4 million against. Matthew S. Levatic also sailed through with over 402 million votes for and about 19.1 million against. Notice the broken non-votes too. They were a consistent 73.3 million across all director nominees. This tells us many shareholders didn't provide specific voting instructions for their brokers. Next up was proposal to the company's executive compensation. Shareholders had a say on how much money the top brass is taking home. The vote was in favour, with a significant 378 million votes for this proposal against 41.3 million votes against and nearly 2.8 million abstentions. This indicates shareholders are generally comfortable with the current compensation structure for the executives. Then we have Proposal 3, the ratification of KPMG LLP as the company's independent registered public accounting firm for fiscal year 2026. This is critical for auditor independence and trust. Overwhelmingly, the shareholders voted to approve this with a massive 453.7 million votes for ratification. Against it, there were about 40.9 million votes and only 776,000 abstentions. This shows strong confidence in KPMG's role. Now here is where things get really interesting. Proposal 4. This was a proposal to amend the company's articles of incorporation to ditch the declassified board structure. What does this mean in simple terms? It means instead of directors serving staggered multi-year terms, giving them a lot of job security, they could all be elected or removed annually by shareholders. This is often a move towards making the board more directly accountable to shareholders in the short term. However, this proposal needed a supermajority, a whopping 85% of outstanding shares in favour, and it didn't make it. While there were 415.2 million votes in favour, that wasn't enough to clear the high hurdle needed for approval. Only about 5.7 million votes were against it, and nearly 1.1 million abstained. This means the board will continue to be declassified. Not all directors will face the vote every year. This is a missed opportunity for increased shareholder control, which many investors advocate for. Looking beyond the votes, let's remember what Emerson Electric is all about. They are a global technology and engineering company. You might know them through their broad range of products, from climate technologies that manage heating and cooling to automation solutions that make factories run efficiently, and even their professional tools segment. Their stock is traded under the ticker symbol EMR, and it is listed on the New York Stock Exchange. They also have various notes that are registered for trading. For instance, their 2.000% notes due 2029 and their 3.000% notes due 2031 are also listed on the New York Stock Exchange. Even their 3.500% notes due 2037 are there. This shows a diverse capital structure with both equity and significant debt. Interestingly, the report also highlights where their common stock is registered across exchanges. We see it registered on the New York Stock Exchange under the symbol EMR, but also on the Chicago Stock Exchange under the symbol CHX, which is an older symbol, likely though the primary listing is NICE. This dual listing capability can offer liquidity and trading flexibility for investors. The filing also lists the common stock on XGI, which refers to the Chicago Stock Exchange. These specific mentions of company debt, like these A10 notes due, Liantianin Ashijio, are important. They represent a significant chunk of the company's financial obligations. When we see these details, it means the company is actively managing its debt portfolio, which is a key part of its financial strategy, and something investors always keep an eye on. Now, looking at the overall picture here, Emerson Electric Co. is a well-established company with a diversified business. The shareholder meeting results show that the board and current management have strong support for their operational and compensation strategies. The robust approval for executive pay and the accounting firm suggests a stable internal environment. However, the failure to declassify the board is a point of consideration. While the existing structure provides continuity, it also means shareholders have less direct annual oversight over the entire board. For investors seeking maximum board accountability, this is a drawback. The company's financial health is always a major factor, and while this filing focuses on shareholder votes, it is a snapshot that complements their regular financial reports like the Shujian Q or Shujian K. Emerson operates in competitive sectors and economic cycles can impact their performance significantly. Their reliance on global markets also exposes them to currency fluctuations and geopolitical risks. What does this mean for Emerson's direction? Well, the vote clearly supports the current leadership and their established strategies. The business segments are performing well enough to earn this trust. The opportunity for Emerson lies in continuing to innovate and adapt to market changes, particularly in the fast-evolving automation and climate tech spaces. A risk could be increased competition or unexpected economic downturns that affect their industrial and commercial customers. In conclusion, Emerson Electric Co. is continuing on a path approved by its shareholders. The company seems stable, and the leadership remains solidified. The biggest takeaway for me is that while shareholders are happy with the day-to-day operations and compensation, they are not yet convinced, or they were not able to rally enough support to move towards a fully declassified board structure. Alright, that is our breakdown of Emerson Electric's latest shareholder meeting report. What is your take on these numbers, especially the declassification proposal and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives into the corporate world. And hey, don't forget to join our Discord community linked in the description to continue the conversation. Thanks for watching. See you next time.